The tax code is not created to make you pay a lot of money in taxes. The government created the tax system because they wanted citizens to do certain things. And how do you persuade people? You either persuade them with fear or you persuade them with money, right? And the IRS decided to do both. So they were like, we're going to create this system. And if you do what we want you to do, you can keep your money. If you don't do what we want you to do, we're going to take your money away from you. And then we're going to do what we want to do with it. So everybody has a choice. And the reason that the tax code benefits entrepreneurs and investors is because entrepreneurs and investors do what the government wants them to do. For example, if I start a business, I, at some point, I'm going to hire people. For every person that I hire, that is one less person that the government has to put on unemployment. So I'm doing them a favor. I'm doing their job for them. For every job that I create, that's one less job that they have to create for somebody else. And so they're like, well, because you're doing that for us, we're going to give you tax breaks. From an investing standpoint, if I'm investing in the stock market, every dollar that I invest in, let's say Apple is now able to hire more people, right? So I'm being a contributor to the economy. If I'm a real estate investor, for every property that I purchase, that's one less property that the government has to develop. That's one less that's one less thing that they have to worry about. That's one less person they have to put on governmental housing. So if you just do their job for them, they're like, we'll let you keep your money. But if you don't, if you're not a producer if you're not producing for the economy, if you're not somebody of value, if you're not helping the government out, they're not gonna let you keep your money. So it's not. I think it's a perspective shift that taxes is nothing to be afraid of. That the tax system is something for you to learn so that you can take advantage of.
Mm.
And so I think when people understand that, they'll be able to get on the right side of how things work.
Yeah. No, that's powerful. And I never, until you explained it, had never clicked to me like that, which is the tax system is just trying to incentivize like almost net value creators.
Yes.
Like if you're adding value into the economy, not just to you personally,
Yeah.
but employing other people or investing in businesses that are employing other people, we're going to incentivize and we're going to give you a benefit for that.
Yeah. Because all they're going to do with your money is that they're going to take your money and if you're not creating any jobs, they're going to take your money and use that for welfare for somebody who doesn't have a job. If you're not investing, they're going to take your money and they're going to invest it on your behalf into the economy because you're not helping. So it's really about, do you want to do the things that they want you to do, or do you want them to take your money so they can do the things they want to do anyway? They're gonna get it at the end of the day, but at least you will be in control this way. I would rather control how my money is going to be allocated than letting somebody else control how my money is going to be allocated.
Mm. You know what? I just wrote down a word in my notes. I said identity. And here's the reason why I say that. I think when we say the tax system incentivizes entrepreneurs and investors, I think there's a lot of people that have a job right now that they just don't see themselves like that. In their mind, they've never really been, I'm the entrepreneur, or I'm like or even have the disposable income to be an investor. And so I'm curious, if someone's like, I'm not an entrepreneur. Like I have a job, I like my job, but I still want to get some benefit with my taxes. I want to get smarter. I want to keep more of my money. I want to keep Uncle Sam out of my pockets.
Right.
Is there anything that they can do where you can still be working a W-2 job, but be smart when it comes to taxes?
1000%. And I personally don't think that everybody needs to be an entrepreneur because it's hard work. But what I do tell people is whatever your job is paying you to do from 9 to 5, someone else will pay you to do that same thing from 5 to 9. Right. So if you are an assistant at a company, right, and you work from 9 to 5, you make your money in your 9 to 5 job. Once you get off work from 5 to 9, there are a bunch of entrepreneurs that can use a part-time assistant. Right. So like, first of all, don't let your job trick you into thinking that they're the only person that can pay you. Don't let your job trick you into thinking that you can only provide value when you're in that office. Right. Whatever you're getting paid to do in your job, somebody else will pay you to do outside your job. Once you start making money outside of your W-2 job, you now open the gates of tax deductions because when you have a business or even a side business for that matter, IRS code section 162A says if you have a business, any expense that is ordinary and necessary to operate that business or side hustle is tax deductible to you. So if you have a side business and you're an assistant, for example, and you're using your cell phone to like call your entrepreneur boss, right? That cell phone is now ordinary and necessary for you to operate your side business. So now this phone bill that you cannot deduct on your taxes at all as a W-2 employee, you can now deduct a portion of it in your side business, right? So I think my advice to people would be, whatever your job is paying you to do, find a way to make money outside your job so that you can turn a lot of your personal expenses into tax deductible business expenses. And that's like the first step of getting on the right side of how things work.
Yeah. You know, actually, because I think that's super interesting. Let's get deeper into the example.
Okay.
So, and let's even use the case that you gave, which is I'm an assistant in my 9 to 5, and then I'm just going to assist a few other people from 5 to 9, and that's going to be my business. So if I'm that person, I can literally just start like an LLC and then use that to do like these kind of gigs on the side.
Yeah.
And then how do I even figure out what I could use as an expense from doing that against my W-2 income?
Yeah, no, that's a great question. So the first thing I want to dispel is most new entrepreneurs think that because their LLC is not set up yet, that they can't take advantage of the tax deductions or expenses that they use in their business. That is not true. When you walk out of your job and say, "Hey, I'm a business owner," congratulations, welcome to entrepreneurship, right? You're automatically a sole proprietor, whether you file any paperwork or not. I want you to file an LLC though, because an LLC separates you, the person, from the business. So if anything was to ever happen to you, you get sued in your business, nobody can touch you personally. So the first myth I want to dispel is whether you have your LLC or not doesn't have anything to do with the amount of tax deductions or savings you get. Number two is, now that you have the LLC in place and you're like conducting business, you get your first paycheck from that entrepreneur. What I need you to ask yourself is, what expenses have I incurred since starting this business that is both ordinary and necessary to operate this business? So for example, like if you bought a new computer because you don't want to use your work computer for your side business, that computer qualifies as ordinary and necessary to operate your business. So therefore, the money you pay for the computer will be tax deductible to you. If you have let's say you have a personal vehicle, but you're using your personal vehicle to drive to your secondary boss's office to like assist him. Do you need your vehicle to get to that location? Yes. Is it ordinary necessary? Yes. Okay, then that means you can write off a portion of your vehicle as well. So you just need to like think about what expenses that you're incurring that is related to your business. And the beautiful part about it is, once you start thinking this way, you realize that a lot of personal expenses that you're already paying for immediately become tax deductible business expenses once you start the business, right? Your phone bill, you're already paying for. Once you start the business, you need your phone for your business, so you get to write off a portion of your cell phone bill. Your automobile, you had it personally, you use it for your business, you get to write up a portion of your business. Your internet, you already had that before you start the business. Do you need to run your business? Absolutely. That means you can write off a portion of your internet in your business. So like, it just like, and I personally had this epiphany at work, because just because you're a CPA does not mean you know about taxes. First off, I learned this at work at my first job, and I'm like, what? Like, why didn't anybody teach me this like throughout my entire college career? I'm sitting at my desk and I learned about this rule, and I'm like, if I like start the side business, like, you mean tell my cell phone, my travel, my dining out, all these things that I cannot deduct while I'm working this W-2 job. But if I find a way to make money outside this job, all these things are now available to me. And that's when I was like, okay, I got to start my own business.
Yeah. And you know what? It's like, the key is that you're bringing down your taxable income.
Yeah.
And because you're bringing down your taxable income, it's lowering the amount of taxes that you pay.
Yeah. And for like anybody doesn't understand, because like, it's funny. I was, so my sister is a business owner, and I do her taxes, and she called me like last year. She's like, yo, bro, can I write this off? And I was like, of course. She was like, okay, like, well, who do I write it to? And I was like, Jesus Christ, I failed as a brother. But so just to like level set the conversation for everybody listening, the way it works is simple. If you have $100,000 in income, you have to pay taxes on all $100,000 in income, period. But if you have $100,000 in income, but you have, let's say, $30,000 of write-offs, AKA tax deductions, you only have to pay taxes on the $70,000 that's left, right? So the lower your taxable income, also the lower your tax rate, right? So so you get the double benefit. So in a nutshell, the more write-offs that you get, the less taxes that you pay.
Mm.
So our job is to find ways to turn our expenses into business expenses and write them off and lower our tax bill.